we've got SPY. Basically, futures are pushing up, a little higher open for the morning. Relatively quiet otherwise on the macro front or economic data, with the exception of course, lots of earnings. And German court criticized the ECB bond buying program. So the euro had a little dunk early, I don't know, 4 or 5 a.m. And that means Lagarde's going to have some work to put that back in defense territory. Basically, the High Court gave them 3 months to fix its programs, ruling it was unconstitutional. So we'll see how that goes. This supports still my dollar thesis of higher, right? I mentioned into the print on Friday that I would not be surprised. In fact, I strongly suggested that we would have a bounce on this dollar into Monday, and it continues a little higher as the euro sells off. What else? What else? We have reopening talk, blame game, Trump on China. Fauci came out and said, yeah, there's no scientific proof that this coronavirus was man-made. So that's going to probably get Trump a little upset. So that was a published piece in the National Geographic, which I did tweet out. So if you want to take a look and what he has to say in more detail, feel free. I definitely have some good charts here that I grabbed. This is in support of my intermarket analysis too, that I did also just post this morning. I wanted to get it out yesterday. I was just too bloody tired. So feel free to take a look at this. It's not market related to today. This is always, for me, macro and intermarket are separate from just technical setups that we do in the room, which, as you know, is much more day trading and then swing setups and management. But I'm definitely looking for some themes here, such as, yes, sell in May. Right now, I'm looking strongly at my stock bond volatility ratio. I've got some intermarket tells as well that look like every other intermarket tell, honestly. A flattening out here in this MACD, but not anywhere close to zero. So there's some work left, which tells me it's likely a retest. I have no doubt that we have some dollar strength right now with the euro down, but I think big picture, it's also bearish euro and bullish the dollar. Every chance, however, it'll get knocked down like whack-a-mole by the Fed, but still. Critical junction, speaking of which, and the euro, is this monthly chart I have shown before, where it bounced, 3 times and then failed, retested in the past month of April, and now looks to be rolling over. I've got some indicators that show Eurozone is in some trouble, and that would obviously correspond with the euro. The German DAX looks like the Nikkei, looks like the MSCI, which is global. NASDAQ and SPY and all the rest of them, worldwide global bear market is still in play with strong bounces into resistance. And all of them really look like this, which is, yeah, they might cross over. There's been obviously some retracement in the histogram, as you can see, but there's still this risk of flattening out and then basically rolling over. I'm not sure where they're going to get the energy to move higher. Honestly, to me, this looks more like, a ginormous bounce into resistance, weak, and it rolls. Don't have that yet in play. I'm curious what the High Court of Germany does to the ECB bond buying program, but that's why they hired Lagarde. She is a lawyer as well. Anyway, we have the euro falling and the yen looks to be intonating higher. I don't know for sure if this is going to be just a chop fest, and it's certainly not anywhere near the white line, but the point is this is a channel, right? And it did get supported and it looks bullish short term. So watching the euro lower, the dollar get a bump, it's still horizontal, you know, big picture. But these things kind of indicate to me that we might get some weakness in the market. This is advanced decline line that has not bounced anywhere near as much as SPY price action. So again, this is a bigger picture. And I'm just saying relative to SPY, we have some internal weakness. I'll go over the internal mechanisms I use obviously on a daily basis, but this is intermarket. It's separate from technical, you know, trade setups. It's separate from macro. It's separate from fundamental, all that jazz. Bonds are kind of coming into a resistance level area, which fascinates me. Not that I expect a big yield pop, but I am expecting higher yields, especially after Mnuchin announced yesterday a, you know, 3 trillion in debt got issued. It's usually rate bullish, just saying, just saying. All right, these are some placeholders I'm using, and if nothing else, it's because it's the beginning of May on a Monday, and I wanted to grab these to kind of see where we're going to go on, you know, for the month. So right now they're intonating a potential rollover, but as I mentioned, I am looking right now for chop before the drop. And when we do get some divergence like that, I start looking at tech rotation. I know it's not popular for May, but I'm still going to look, especially after retail did such a good job for us 2 weeks in April, in particular, came up off this bottom, consolidated, and then shot higher. Now it's pulled back. I'm still watching this for potential opportunities. But small caps are not safe until it gets up and above this this gap from 2016. It cleared right straight through it like a knife through butter, and it's only rallied back into resistance. To me, that's a big deal because it held since 2016 Trump election. So I'm really keen on this level. Basically, above is bullish, below is bearish, and I'm sticking with that. Lumber yields, I've talked about this. It's been setting up for a few months, literally, and I'm watching that. I showed this before. I just wanted to include it. Again, it's the copper gold ratio and the 10-year consolidating, kind of intonating inverse head and shoulder. Again, I know it's not popular with momentum plays, especially this week. We have so many cloud plays reporting. Wow, really fabulous, you know, platform plays and high flyers, shop, TDD, AWA, just so many, like 8 that have been really extremely strong. So we'll see if we get a change here. Oil and gas, I still like the action big picture. In other words, relative to the commodity of oil, which I think will have another whack-a-mole moment. We're already up 150% off the lows 3 weeks ago in crude, but this is still sideways. It can retest, it can go higher, but relatively speaking, this seems to be doing its thing of consolidating, and this thing meaning XLE. So Chevron, Exxon, the majors. I'm still very interested in this space as it relates to fishing, right? Value. When stuff rotates from this momentum into cyclicals left, you know, and value plays, I'm going to look at energy, retail, small caps, and yield. And that's really it. So we had our big bounce, if you will, from March 20th. This is the 23rd. I sent this out to clients. On the 18th, I said we're up to my quarterly price target of 2873. I expect a sharp rejection there and then a retest lower. However, SPX closed above the 10-week, which is bullish. And with that, I wouldn't be surprised to see a chop into 2956 before reversing down in May. So I already printed that mid-April. Well, we tagged 2955 on this Wednesday, April 29th. So we're already kind of churning in that neck of the woods. That's still my play. I still think that that has some, let's just say, reason for being a roadmap. All right, so basically, yeah, Fauci's out saying, yeah, it evolved in nature, jump species, not man-made. We have massive continued just sadness globally. This is 2.5-mile queue of people waiting to collect food in South Africa. Oh my God. This is the news on Germany's constitutional court, which matters also to the dollar, higher theme. I love this chart by Bob, and that is speculators are way the heck up here. Crude did a massive bounce, right, from the negative lows, but that's also setting up for some risk off. And I know a few of you are regular traders of oil big time. Just keep that in mind. If you're also long Exxon and such, you might want to, you know, sell some calls against that. So we're digesting at the 21-day, and I still think relative to the commodity, it's safer. But I'm just saying, be careful, because these speculative extremes have marked really beautiful turning points. Okay, so that's my thesis for now. I want to just let's see. Yeah, I think that's basically my overview of stuff that I saw pre-market, the intermarket analysis, and then real quick for yesterday, we had a few that were what you'd call pretty successful day trades anyway. I'm impressed. So yesterday, real quick, number one theme that I have had since this commodity has been moving higher was that gasoline would make up, right? It was a laggard and it had space to make up. Well, here it is. It is poking above 13. It's already 14 and change in pre-market. That's what I would call on its way to 15, right? USO, I mentioned I wasn't so excited in trading that particular instrument, but I did like the way that UNG was working, and it's working higher. It opened above the 10-week, and this is also shooting up. Some other ones yesterday, which I'm impressed by their strength, was US Steel. And I mentioned it needs to stay above 730 for two reasons. One, it is a prior week high. It opened strong. It's also the 10-week. We had all kinds of reasons for 730. Look at that puppy. Yesterday, it moved all the way up. Almost tagged the 850 again. So that channel, that day trade worked brilliantly. ROKU, I mentioned yesterday before I closed, well, actually, whenever I got, this candle, that we were likely headed to 124, which was this area of the trend line. We actually are not only, we didn't tag it immediately, not until after hours, but we're well above into the next level, which is the 128. And then 134. So ROKU worked really well as a trade for the day. Tesla, 786. I said if it stays above 733, and boy did it, gorgeous. It got up to the intraday 7 and 17, pulled back shallow, but it stayed above. It closed above on the hour and then moved right up to 762. What was my next price target? 786, and we're there. So that is what I saw yesterday, and there wasn't much to see. Again, UGA doing it, UNG doing it. The refiners, totally. And I said, because gasoline, this is actually going to help the refiner profit margins. This would be my favorite setup. VLO, MPC, HFC, Holly Frontier, and CVI. And they're doing awesome. Now, not all of those that I like for option plays. I already mentioned my absolute favorite is VLO. MPC is the second. And of course, Exxon doing really well. Saved off that 21, so it filled the gap 2 days down, and now it's reversed strongly and moving back up. It's 47.20 above is obviously a nice new channel. So Exxon's working extremely well. GBTC, love this chart setup. I think this continues higher as well. And I thought that was basically the high points for the day trades anyway. US Steel, ROKU, Tesla, and the oil and gas plays, UGA, UNG, and then specifically the refiners, if you will. So that was my quick review of stuff from yesterday. Oh, there were three others that I didn't press as strongly, but I said, okay, if Snap stays above 1650, if Netflix stays above 415, But those weren't just so motivating to me. Honestly, I like the other plays better. And I know someone was asking about Twilio, and I said, yep, looks really good as well. So those three, we'll see what happens this morning, but I wanted to give a quick overview of the price targets on SPX. We stayed, which wasn't a surprise, right? 21 days, that white dashed line, perfectly tagged. Here's another, 27.94. Long story short, this filled back up into the intraday of 28.42. That is where we basically just stopped on a dime. And this big white thick line is quarterly, right? So that's why on the 18th, I had said we're going to most likely hit quarterly, have a sharp pullback. And then because we had closed above the 10-week, remember that quote that I just put from April 18th, we would likely snake our way up into 29.56. Well, we hit 29.55. So now we pulled back to the 21 again. And that's where I'm really trying to assess if we have another move higher, and yet I see weakness under the surface. And some of those tells, as I mentioned yesterday, were in the volume indicator, the fact that we opened up below a key weekly level, but we tagged perfectly the breakout. So now this is really important. That would be shocking to me if we just had that little amount of breakout and then we move higher. I'm thinking it gets tested. In other words, this was a 61.8 fib retracement. That was a 50% fib retracement. That's maybe a 38, maybe it's that strong under the surface, but color me skeptical. So I'm looking at if we get below this 55 and basically below this level, let me show you here, right? We tagged and we went back up, end of day. We break this, it's a nice short. So that's what I'm gonna be looking for today. The others did not really produce too much. We just went sideways. You can see it's not really very helpful. Ziv was not helpful, stayed red. VIX did exactly what I, initially, where are we? Right here, that it would pull back. It could pull back all the way to 35, and then I want to see how it performs. Right now, that's bearish engulfing. It likely comes back to 34.40. So I'm going to be looking at this level to see if we can stay above the neckline. Remember, this was left shoulder, head, right shoulder. We broke out, we tagged the trend line. Wouldn't surprise me, I said, if we came back to 35, maybe even 34.40, and today it looks like that's in play. Hope that helps for a review of yesterday. Let's see what we get today.